Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. If we look here, we can see the significance of the second bullish white soldier made on Tuesday was not lost on the market. Not only did it punch up that day through the February high at 122.42 and make the fourth highest close of the year, but also closed over the two downtrends of the 2008 to date move, currently 122.34, and the 2011 to date move, currently 122.45, if only just on the latter. As I said yesterday, and I suspected, the closes over the downtrends were the most important of all that jumble of action. And then the reaction move lower made yesterday, well, of a bearish engulfing pattern, almost a key reversal down, was a suitable riposte to that tentative bullish move over the downtrends. We'll now see whether this was a knee-jerk move lower or a proper rejection of the bullish incentive. Overall, what initially looked like might be a bull flag type formation over recent weeks, then a possible, unusual, broadening formation, right-angled and ascending, well, that may be further morphing into a bull channel. That's currently between 121.67 and 123.48. For the moment, I'll still keep the provisional target X for the bull flag above in the 124.35 area. But as you can see, there's been and still is lots in the way on the journey up there. So far today, a cautionary further dip lower towards the lower bull channel line, but then a pullback up and looking like an indecisive doji cross right now. Below the bull channel line, we have the March 2018 low at 121.52 as support. The next chart to look at is cable, aka sterling against the US dollar. Finally, a day without indecision yesterday. Bearish black crow that closed below the second of the trio of overhead resistances of 140.75, 141.43 and 142.43. In this case, it was a congestion at 141.43 that is now once again a resistance. Now, whilst this is no longer evidence of the recent intraday indecision I've noted in the market, it still shows how in current bullish forces evident since September of last year have battled and rubbed up against the latest challenge seen overhead. As I say, this trio of overhead resistances. We are still tantalizing close to the preliminary target X in the 142.45 area for the double bottom pattern formed since mid-March. A full target X1 for the pattern is in the 143.30 area. Overall, the market continues to travel between the lower time below, currently 138.76, together with its long-term partner, the medium moving average, currently 138.66, whilst above we have the middle time, currently 143.36. Both times are from the June to September 2020 bullish shift pitchfork. Now, please remember, this pitchfork has given the bullish angle attack of this market since September last year. As a quick postscript, this latest move up can be traced back to the weekly key reversal up made 3 weeks ago. So far today, a further small dip down towards the key 140.75 congestion, but holding off testing it properly as yet. The next chart to look at is the euro against the sterling. A bearish dark cloud cover pattern yesterday, halting the move higher that we've seen this week. Now, some might say it was the influence of the April 2020 low at 86.69 that had halted the move up in the previous session's try higher and contributed to yesterday's pullback. I would agree with that, but as I pointed out in yesterday's commentary, we had and have the rapidly descending medium moving average, currently 86.79, not only entering the frame from above, but also about to hit the market. And I think it was this that really triggered the move back down. Below we have the ever-present rising short-medium moving average, currently 86.21, which has, and I suppose still is, providing support to this market. Now, overall, I've spoken for a while now about a new, smaller pattern emerging, a possible small bear flag pattern over the last 2 weeks. Nothing is certain as yet, and yesterday's action, even as bearish as it was, did not really help that much. However, I still think it is worth considering, because we now have the descending medium moving average directly influencing the market, and that is worth thinking about. So far today, a small reactionary move back up as prices got a little too close to the short medium moving average below. And that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.